All right, welcome to the new channel. This is my Modern Market Mind. This is going to be my second attempt at trying to go through this. It's going to be a Fidelity portfolio account breakdown as of June 16th, 2025. Basically documenting my picks, future trends, why I'm choosing certain things, and a few honorable mentions for stocks that I'm looking at but have not done enough research to invest money into yet. The first attempt, I had my account numbers out in places that would make it really hard to make a video and blur it out. So I'm redoing it, going through it again, and just good practice because it should be a lot smoother. So to break it down, there's three main parts. It's going to be REITs, which is REITs, real estate investment trusts. So real estate basically. I'll talk about it a little bit more. It's going to be ETFs, which are basic like stocks, stuff like that. And then crypto is going to be the third one. We're going to start with ETFs. So ETFs, we got Vanguard Index Fund, basic like market tracker kind of thing. Tesla's a good one, even though recently they've had the breakup between Elon and Trump. Surprisingly, it is actually still up some, which I bought right after the news, after the dip from that, which was pretty good. Tesla has a low analysis ranking or whatever because it's completely overvalued, but it serves more as a kind of like trend, being environmental and doing a lot more things with energy wise rather than just being electrical cars. So there's a lot of money to put into those beliefs. Schwab, another market tracker. Palantir is going to be a new company that is basically the AI, the government. Think of like Boeing for planes and what's another, Lockheed Martin for like missiles and stuff like that. Palantir is going to be the AI and information center of the government, pretty much looking for the future as of looking at it right now. I did have it written down a while ago to buy some, didn't do enough research on it, didn't end up buying it, but this year it is actually, let's see, it is up nearly 6 times. And then also I want to go through things like PE, stuff like that, which is price to earnings ratio. So usually you're looking for around 25 to 35. Anything lower is generally considered good, although you really don't want it to be too low. So a 600 PE is really overvalued, but obviously they're in the government sector, so they can pretty much print money. So regarding that, they can upcharge a lot like Boeing do with 1,000% upticks for whatever, the most basic stuff, and they'll get away with it. Tesla at 180. Yeah, there's two main stocks going through now. Okay, SMR, let's start off with the nuclear. So it's going to be SMR, CEG, CCG, and OKLO, and as well as honorable mention NNE. I had NNE, but it was too risky, or I didn't like it, it was too risky. I ended up breaking even on it, but I didn't reinvest into it. So this is actually the second set of trades I've gone with those four: OKLO, CCJ, CEG, and SMR. They're all energy/nuclear stocks. There was recently a big break in the there was a deal passed, or an act passed regarding nuclear. They're going to invest more money and allow more or less regulation kind of deal. So that kind of market is on an uptrend, and especially at these energies being so low right now, they're exploding. I believe each one of these has done about 40 to 50% within the last 3 months. So, okay, this one's double. SMR's double. Let's see what else we got. CCJ. That one's 1.5. CEG. 1.5. And OKLO is somewhere around 3 times. But obviously, honorable mentions, NNE, they're actually not profitable because they are such a new company. So again, their PE is actually negative. So not good, but They are like a revolutionary kind of like new to the game kind of company who, you get in on the ground floor, and it could be 10,000%, or not, I don't know, not 10,000%, but like a high, multiple folds times the money you put in. This is actually one I bought today, NPSCY. That is going to be a Nippon. Nippon, I think is how you say it. It's a Japanese corporation that makes steel. They just bought they bought complete ownership basically with a deal agreement between the government, U.S. government, to buy out U.S. steel. That's why I bought it, based off the news there, and just in general trying to diversify. They are they're Japanese owned, so trying to diversify, and the yen, I believe, is actually increasing in value compared to the dollar, so it's kind of a good like way to ensure it's diversity, but it's also a safety net, kind of, so to speak. I guess more so just diversity, but same kind of thing. Next we got Lockheed Martin. Well, actually, let me see. Their PE is actually 8.4, which is really low. Might be the risky kind of low, but if that's a thing, I mean, I don't really like to see too low of a PE, I guess. I don't feel like there's a sweet spot to it. Next up is Lockheed Martin. Always kind of a good one to go to because, again, they're work for the government. They can print money, basically. They can charge whatever they want. And just kind of the military-industrial complex kind of always going to be around or at least for the foreseeable future, is going to be around for America. PE 21, which is right in the sweet spot. QQM, another index market tracker. IBM is a good one. We're kind of in the age of information right now. 47 PE, and I believe, yeah, they've actually done about 25% in the past 3 months, which is pretty good. And just with all the AI, quantum computing, all that kind of stuff, it's going to be a good one to own in the future. And actually, looking at it now, I'm surprised. I think I actually know why, but I need some Microsoft because of their quantum computing, which a few of the honorable mentions that I will mention actually are in that kind of industry of like the quantum computing and supposedly ground floor. I talked to somebody who says it, so I'm going to look at it real quick, give my live first impressions of it, and we'll see what I think. But yeah, Microsoft is like a big name for quantum computing because they just made one of the first that I know of, first big kind of deal with quantum computing, which do research on it's kind of crazy what it is. Then AVGO is, I always kind of forget what this one does because it's not like broadcasting like it says. It is, yeah, they make semiconductors, infrastructure for software. It's a little bit trippy, but good. Then this is another kind of DI hire, which is BMY. It's a big name pharmaceutical, PE of 18, low on the 52-week spectrum, or the 52-week range, which a lot of these, you try and buy on the lower end of it. I like to set an alert for about 5%. If it goes down 5% within a day, if I'm watching that stock, I'll generally buy it unless I don't like it. But yeah, just kind of with COVID and whatever, good stock to have. Next up is Apple. They have the Meta glasses, all the technology with semiconductors and quantum computing coming into smaller and smaller packages like phones and all that. I mean, they're positioned to be around forever, basically. Believe that their PE is actually good. 27, it's another good one. Vanguard. Oh. Is another index tracker, and then we're going to move into the REIT. Oh, sorry, it's not an index tracker. This is actually the first area of the REITs. REITs, real estate investment trusts, basically means you invest money, they buy property, rent it out, sell it, whatever they got to do, and you get money back that it made. legally they have to pay at least 9% of the profits to dividends, which means shareholders, they have to pay it. So it's a good thing to pay attention to. And then if we go to dividend view, it's also just an easy way to make money, especially if the stock actually increases in value as well. It makes it really easy to just get some money on there. So yeah, distribution yield, PK has a 10.10%. Yeah, 10.10%. Generally, that's considered a riskier REIT. I can't breathe. Oh, my nose. 5.6, 5.44. These are all good percentages. Generally more stable. That's the pharmaceutical. But yeah, these ones are considered more safer. I believe, based off of the percentage I have right now, I'm making just $100 a year off of dividends from $1,800, and then as well as the actual stock performance. So if the stock doubles in price, I make even more money off of that. Just a good way if I have extra capital or extra like liquidity, to kind of invest in that, get some just money rolling through there. Yeah, just a good thing to have. It's around a little over 5%, so 6% of whatever I put into it on average. So I mean, just easy money. But PK is a risky one. O is a good one. And then Sun is a good one. And yeah, I wonder how many is that? I should have 5, I think. Yeah, 3, 4. Maybe it's just 4. 2, 3. It is 5. Okay, VNQI is another good one, because that is a global REIT, so they have properties all around the globe. Another diversity, getting outside of the U.S. necessarily. It's a good one to have. And then now we're going to go into crypto. Currently not invested into any of it, but obviously there's like the big 2, Ethereum and Bitcoin. Bitcoin has been close to its all-time highs recently, so I haven't bought into that. I've been playing around with Ethereum. I'm not very good at crypto investing yet, but the Ethereum has a much, I'll show you, but compared to the 52-week range, it has a much lower spot on there. So we'll look at it. Bitcoin was at 107. It hit like 111, 112 within the past few weeks. So I've been up a ton. I haven't bought any of it, but Solana is a good one. But Ethereum one's another one that I'm watching, because it moves so much and it's off of the 52-week range by so much too. But I mean, yeah, it's kind of it's a lot easier to judge a company because you can look at PE and just like all the other aspects of what they're doing, where they're based in the market and all that. Whereas Bitcoin is more of just, if somebody buys it, it goes up in value, and they don't, then it doesn't. So it's kind of a harder one to time. Solana is another good one. I don't have anything. Yeah, no crypto right now, but I have funds ready to put in the market if I see an opportunity. But it's just a lot harder to time it, so I'm not in anything right now. And then as for my picks that I have not looked at yet, and be honest, I got these from somebody I was playing Rainbow Six Siege with, who, I'm not gonna had inside. I'm not gonna say anything. But yeah, so the first one is gonna be MSTR. That's what he said. He said he had insider information, but I don't know. I don't know if that meant I assume it meant he knew somebody who does stocks or whatever, and this was their pick, because he didn't talk about it in a way that he knew like they were going public or like they were about to blow up. It was more speculation. So they're up 27 year to date. They're down within the past 6 months. MicroStrategy. So I mean, obviously a good position in the market, but I don't know. That's a lot of red and a lot of large percentages, so I don't know what's wrong with them, but this kind of just noting it down if it shows up in the future as like a big company or whatever, but they are down a ton. Revenue, net income, everything, which really is kind of crazy to think about, that your revenue is down 3%, and yet your net income is down. I guess they could be reinvesting it. I guess that's what it could be, but I'm not exactly sure. So, not going to be buying that one right now until I figure more out about it, but I don't know. Interesting, I guess. I guess they could be reinvesting it, and that's why their net income is down. Next one is going to be Qubit. There's not even a chart available. Okay. Like less than 10%, that bump. It's just not moving anywhere. I mean, I don't know. These are kind of I don't know. I mean, they're so small, there's no information on them. I mean, that was just like another one that wasn't going anywhere. Next one is IONQ. I mean, they're all just like down. It's a lot of percentage for the past year. That's pretty good numbers. I don't know. That one actually looks kind of interesting. I'm going to do more research on this one. Quantum computing, hardware, and software company. But yeah, this one's kind of interesting. So, and it's a fairly new company, 10 years. So if anything, this would be my top pick for. Yeah, this one could be a good one. I'll have to figure out more about this one, but those are the honorable mentions. And then also just an easy play that could make money is actually the Trump official coin, or official Trump coin. This one actually has a pretty, been watching it, and it has a pretty solid bounce on $7 to $8. Like anytime it really hits there, it generally goes up some, right? I mean, I don't know, maybe not, but I mean, it has these kind of spikes after a drop, so I don't know. That one might be interesting, just kind of look risky, just fun play. Obviously younger, so I can have higher risk and put money on something like this and hopefully get in and out pretty fast and make some decent money, because it wouldn't, obviously you wouldn't want to be holding it like whenever he gets out of presidency. Maybe, I don't know, enough people don't like him to where people would buy it, I guess, once he gets out of presidency, maybe. But yeah, that's generally, I feel like it's had a bounce off of $7 or $8. So if it gets low enough, I might just gamble some and see what happens with it. But that is going to be the first breakdown of the portfolio, and I'm just going to go through my watch list just to kind of see if there's any, just kind of document it and see if anything blows up in the future, like have it written down, I guess, or just markets. But yep. All right. Thank you for watching, documenting the first one. There'll be more. I'll try and do more content on like just breaking down stuff I learned from investing and like being in business and general things I'm learning, I guess. Try and document it, help y'all, whatever kind of content fits best, and whatever I learn. Reading, what are we reading? Like, got Atomic Habits, Rich Dad, Poor Dad, and Psychology of Money. That's what I'm reading right now. So, not really. I'm trying to read it, but I'm just busy. So, that was the first breakdown of it. Thank you for watching. Yeah.